Hey everyone, and welcome to your weekly agricultural updates for August 9th, 2026. We have got a fantastic, highly data-driven explainer for you today. We're going to unpack exactly how a recovering, but still significantly deficit monsoon is completely reshaping the Indian agricultural landscape this week. Let's get straight into it. All right, let's just jump right into our main weekly headline. Look at this number, minus 11%. That is our cumulative countrywide rainfall deficit since June. And honestly, this single data point is the underlying catalyst driving literally every market shift and sowing decision we're going to cover today. Yes, we've seen a bit of a weekly recovery recently, but this 11% shortfall is still casting a massive shadow over the current Kharif season. So here is how we're breaking things down today. We'll start with weather and crop intelligence, move into input costs and market signals, map out the regional hotspots, analyze the systems and farmer implications, and then we'll wrap it all up with our strategic outlook and actions. Okay, Section 1, Weather and Crop Intelligence. Let's track these monsoon deficits and the sowing recovery. Starting off with our agroclimatic analysis, the IMD's Extended Range Bulletin is showing us a really stark regional divide. We are looking at a massive 27% rainfall deficit in the east and northeast, and a 12% deficit in the northwest. Plus, when you compound that with a moderate El Niño that is forecast to strengthen, well, the risk for the late Kharif stages is heavily elevated right now, especially as we move through August and September. Shifting over to crop intelligence, we're seeing a pretty fascinating dichotomy playing out in the fields. By late July, the overall Kharif sowing area was actually only 2.9% below last year. Not too bad, right? But the split is what's telling. Farmers are heavily favoring irrigated, safe havens like rice, oilseeds, and sugarcane. Meanwhile, rain-fed crops like pulses, maize, and bajra are lagging way behind. It's a textbook risk-averse strategy happening in real time. Moving on to Section 2, Input Costs and Market Signals. Let's talk about the economics of Kharif 2026. Diving into input economics, we actually have some good news first. Fertilizer stocks are sitting very comfortably at 51% of requirements, and global urea and DAP prices have actually fallen from their recent peaks. So short-term availability isn't the primary risk. No, the real pain point farmers are feeling right now is fuel. And here is where the rubber meets the road. It's all about causality. Less rain literally means a higher reliance on two-well pumping. And with state-wise diesel prices hovering anywhere between 95 to over 105 rupees a liter, like in Andhra Pradesh and Telangana, those irrigation costs are aggressively eating into farmer margins. This high cost of operation is straight up pushing farmers away from water-intensive crops in regions where they have to pay a massive premium just to pump water. Now, when we examine market and policy signals, there is clearly a structural policy intent to push diversification away from traditional staples like rice and wheat. I mean, look at these cumulative minimum support price hikes since 2014. They're absolutely massive. Ragi is up an incredible 236%, and bajra is up 132%. But here's the catch. The immediate monsoon shock is overpowering even these incredibly strong price incentives in the rain-fed areas. Farmers just aren't risking it. Because of that acreage lag we just discussed, spot mandi rates for pulses like tur or arhar are holding super firm across the country. They're sitting right around 7,500 to 8,000 rupees per quintal, which is near or above the MSP. This price action is a direct reflection of both the current sowing deficits and the market anticipating some serious supply tightness down the line. Next up, Section 3, Regional Hotspots and Realities. We're mapping out the 111 high-risk districts. Highlighting these regional hotspots, it's clear the Agricultural Ministry's 111 flagged high-risk districts are heavily concentrated right in the rain-fed interiors. In the northwest, we're seeing groundwater stress and late paddy. Central India is battling a weird mix of localized waterlogging right next to pulse deficits. The South Peninsula is sharply divided between safe, irrigated sugarcane and stressed rain-fed millets. And then you have the east and northeast facing the dual threats of floods and tightening transplanting windows. What we're really witnessing here is a rapidly widening gap between two distinct agricultural environments. On one hand, irrigated belts can leverage reservoirs to buffer the deficit, effectively paying that premium power and diesel cost for security. But for the rain-fed belts that are fully exposed to rainfall variability, making area cuts isn't a failure. It's a completely rational survival response, even if it does create system-level supply vulnerabilities later on. All right, Section 4, Systems and Farmer Implications. Let's take a look at the human element of sowing. From a systems interpretation perspective, we are basically watching a massive cascading effect. Think of it like a giant traffic jam. A severely dry June followed by a rapid July catch-up compressed the entire crop calendar. It squeezed all the vegetative and reproductive stages of these crops into a highly volatile El Niño-affected August. You stack that compressed calendar with elevated irrigation costs, and massive crop switching becomes the only logical outcome. When we zoom in on the farmer-level implications, this dynamic hits different scales of farming very differently. Smallholders in those rain-fed belts, typically folks with 2 hectares or less, are getting pushed towards super conservative, low-input strategies. They're using less fertilizer and sometimes cutting acreage entirely. On the flip side, larger operators have the capital to exploit those MSP signals, deploy custom drones, and dynamically reallocate their acreage to manage the monsoon gaps. Now, as we interpret the system, what are the hidden structural risks bubbling up under the surface over the next 3 to 6 months? We really need to monitor these closely. 1, we're looking at a potentially huge supply gap for Carve and Mung. 2, a maize shortfall could seriously threaten national ethanol blending targets. 3, we are seeing severe groundwater and soil stress from overpumping due to that high diesel use. And 4, most critically, there are looming localized food security issues in those 1,111 high-risk districts if the rains fail again. Finally, Section 5, Strategic Outlook and Actions. Let's look at the next 4 to 8 weeks. Focusing on our strategic outlook, we are currently tracking 3 distinct risk scenarios from mid-August to mid-September. The base case is a partial recovery where rice and oilseeds remain pretty secure, but pulses continue to lag. The second, definitely more dangerous scenario is a dry-leaning El Niño that could severely spike pulse prices and force government imports. And the third is a mixed scenario, localized heavy rain causing flood damage in some pockets, while other belts remain totally dry, producing dual stress across the country. Let's translate all this data into some actionable insights. For farmers out there navigating this mess, priority number 1 has to be adapting to the El Niño constraints. In rain-fed belts, you want to prioritize short-duration varieties of Tor and Mung where those windows are still open. Try to use a balanced NPK mix rather than pure urea to reduce your drought vulnerability. And crucially, optimize that expensive diesel irrigation by strictly following IMD's short-range forecasts. You don't want to pay to pump water right before it rains. And for the east and northeast, adopting shorter duration rice can really help in those flood-prone areas. Now, for you agronomists and ag tech startups, the immediate need is designing block-level contingency plans specifically for those 111 stress districts. Startups, you should be building hyper-local risk dashboards that integrate IMD anomalies, delivering micro-advisories through platforms like Bharat V-Star, and developing low-cost, diesel-efficient solar pumps will be absolute game changers for these stressed zones right now. And finally, for the policymakers tuning in, you've got to stay ahead of the curve here. That means making early import decisions for pulses and maize before the supply gap really bites. It requires an immediate strengthening of universal microinsurance in those 111 high-risk districts. And looking longer term, leveraging platforms like BioFac to scale climate-resilient millets and organic value chains is going to build fundamental resilience in these vulnerable rain-fed areas. Wow, okay, we've covered a massive amount of data today. And honestly, it all points to a season that is going to be defined by hyper-local risk management. So I want to leave you with this final thought to consider. As El Niño strengthens, how will your specific agricultural strategy adapt to these localized stress zones over the next 8 weeks? Let that simmer. Keep analyzing the data, stay adaptable, and we will catch you in the next explainer.